me or Kami, okay? So Chemico, a significant customer of Arjan Co, entered liquidation and creditor are unlikely to receive more than 20% of the amount. Okay, so they are significant customers, so which means it's supposed to be in our trade receivable, yeah. And creditor are unlikely to receive more than 20% of the amount outstanding. The amount outstanding from Chemico at 31st March is 0.8 million. Okay, so none of the amount outstanding have been received to date. No further work have been performed as a result of this procedure. Okay, none of the outstanding have been received to date. So you don't go and put any procedures like your now is supposed to be what you want to do now, right? You don't go and put that you want to refer to any report, bank statement or so on, yeah. Okay, so none of to date. Okay, so no further work have been performed as a result of this procedures. As a result of this procedures. Okay, so now is this amount material or not to the financial statement? 0.8 divide by the, yeah, is this amount material or not? Yeah, it represents 1.42% of total asset. Okay, so it's obviously is a material item. Okay, now ideally, should we adjust this? Should we adjust or not? Just or not, yeah? This event, is it an adjusting event? Of course, it's happening after the year end, but is it relevant? Yes. So what do we need to do? Do we need to write it off? What do we need to do? Ideally, not we, as in the management, need to consider about writing it off. Okay. So now, if they are not written, if they have not write it off, they have to show us some evidence, yeah, that they are recoverable items. Okay, so done with this subsequent event, yeah. Later we have to comment about it, and then when we comment, we're going to talk about all those things that we understood on the subsequent events after reporting date. Okay, now next one is all analytical procedures. Okay, so let's go and see what is the position. Inventory value, there is 4 million, 25 million. Last year is 25, now they only have 4 million. Okay, so now is it good or bad? Yeah, now I have lesser inventory value. Yeah, good or not? Okay, so now let's go and see, expectation. Inventory has fallen by 84% in the year, and this is in line with the expectation as November 20x4 management moved into just-in-time, okay, system on managing, okay. So the significant fall in inventory level is consistent with the reduction of the holding period, okay. So auditor attendance at the year-end inventory count, sample count performance, and attendance, they attend only, and count controls observed. Okay, no inaccuracies were identified. No further work over the completeness, accuracy, and existence of inventory is required. So, what do you think about this? The fact that they are taking it too simple. What do you think about it? Yeah, nobody want to say anything? Yeah, what's your opinion about it? Okay, not necessarily we want to say it is fraud or error, because it is not on the management so much. It is more on the auditor. How can you just accept it by attending? Okay, so if I go and confirm, or if I want to obtain assurance about, I want to give assurance on a particular financial statement item, right? I must meet all the assertions. Okay, all the assertion must be met. So now I am not doing any procedure for completeness, accuracy, existence. Yeah, so many things is not done. So it is not right. Okay, so we have to talk about what are the procedures that we need to do to complete this. Okay, now next one, holding period. Holding period is 15 days. Last time is 94. Movement in just in time will reduce the inventory holding, so movement is in line with expectation. Okay, per management lead times with the supplier average 20 days, hence the inventory holding period is expected to be 20 days. Okay, but we expected it to be 20 days, but management is saying it is only 15 days. Okay, so inventory holding of 15 days appear to be shorter than expected. Management stated that holding are less than 20 days as customer order are manufactured 1 week after an order is placed. So they are doing it as per the requests, and that's why they are claiming it to be faster. Okay, so let's see what they have done. Yeah, a sample of customer contract terms was reviewed, okay, and confirmed that they state the order are expected to be manufactured within 5 working days and with a fulfillment within 10 working days. So it is showing 15 days. So this is consistent with the company advertised term and therefore supports the reduction in inventory holding period. So do you think the work done is enough or not? Is this work done enough? How can it? Delivery order. Yeah, you want to, yeah, at least you take okay, so a sample of customer contract term are reviewed, okay, and confirm they stated the order are expected to be made. They only look at the contract terms, they don't even see whether it was fulfilled or not. Okay, so at least a sample of, they should have done a sample of, okay, so this was the order date and then this was the delivery date. Okay, so nothing done, they just expect it to be, okay, so just expect it by reading at the contract term, then it will be correct. Okay, so this is not right. Yeah, okay, so where is this? Okay, so next one. You understand, right? The way that they're questioning you, written down for obsolete inventory as percentage of inventory held. Okay, so used to be 5, now become 10. Yeah, so the move to a JIT system would eliminate obsolete inventory and the need for write down. Okay, so the expectation would be that the written down would be lower or close to 10%. But is it that? No, right now is 10%. Yeah, management has advised that they do not currently have sufficient experience with the new system to ensure only required inventory was has been ordered. Okay, so as a result, we have taken a cautious approach to the write down. Okay, so they have increased it. Yeah, okay, so total write down of obsolete of inventory of 0.4 million is lower than the 20x5 amount of 1.25 million. Okay, so this is less than 5% of profit before tax and therefore immaterial, so no further work performed. Okay, so basically this person, what he do is he saw the percentage is better than last year and looks at it as immaterial, so didn't do any other work, no further work performed, nothing. Yeah, to confirm the obsolete stock. Okay, so this is again inappropriate. Receivable collection period has increased. Yeah, no changes in the credit period. Hence, collection period is expected to remain in line with prior year, but there is a 4 days increase. Okay, now they are saying it is slow payment by invoice by Chemico. Okay, the financial controller is confident that the payment will be made. Okay, so outstanding invoice agreed to trade receivable ledger, a sample of customer confirmation of the balance owed were obtained in writing. Okay, so this is not enough. I have to do some procedure just specific for Chemi. Okay, so not enough. Yeah, so now let's go and look at another one. Allowance for receivable. Allowance for receivable 3%, sorry, 5% now become 3%. No changes made over control. Allowance is expected to be in line, but your finding is our financial control review all trade receivable at the year end and concluded that fewer default were expected than the prior year. Okay, hence the reduction in allowance. Okay, and total fall, yeah, is below 5% of profit before tax and is therefore immaterial. No further work. Okay, so very funny, yeah. This auditor very malas one, yeah. Everything also don't want to do and then claim it as because it is immaterial. Okay, so now let me explain to you with an answer. Okay, hold on, yeah. Let me just quickly share with you. That way we can do more question. Okay, hold on, yeah. Arjun. Hold on, yeah. Now let me just quickly send it to you. Now you have any question to ask not about the Arjan Co? It's a very interesting way of asking because in the past they have not asked us in this manner, yeah, like I told you. I share it with you in this okay, so I share it with you in the chat. Can you receive it? Okay, done. Can you download this? Okay, now let's quickly go in this class, yeah. Open the answer. Right, put it. Okay, let's go. You open it. Okay, so some question we can do it in the class, but like today all we want to do it more questions. Yeah. Okay, so I'll share with you. Okay. Now let's look at. We will improvise. Okay. Now this is on first one is on trade receivable. The fact that there is this subsequent event. Okay. So remember the way that you want to present this answer is going to be OCW and why, because this is going to be a commenting question, isn't it? Okay. So first one is on the trade receivables and this is on the trade receivable, which is basically on the recoverability first. Okay, so which is on the recoverability. Yeah, okay. Based on the information received after the year and the understanding is that significant customer chemical will not be able to settle the debt of 0.8 million. The understanding is that only 20% is recoverable from the customer as they will enter into liquidation. So this is going to be your observation. Okay, so you're not writing anything. This is just cut and paste. Okay, and then you're going to. Oh, okay. So hold on. Yeah. Spins. Can you have a look? Okay. Okay, so now that is your observation. Okay, so now we want to talk about the comment about the issue. Okay, so let's go and write it. Let's go and comment about it. Yeah. Okay, so now hence as per ISA 10, this is considered an adjusting event as per the condition. Yeah, all these are still observation. Okay, so we want to say this is inappropriate. It is not appropriate. Okay, as number of inconsistency identified during the announced procedure with regards to the issue. Yeah, the allowance for recoverable debt have been reduced from 5% to 3%. Okay, there's a significant customer who is in liquidation, and it is revealed that only possible to recover 20% of outstanding amount. Okay, which means allowance should increase. Yeah, however, in this case, it has reduced. Okay, so this is also again inappropriate. Okay, currently the audit evidence obtained with regards to allowance of the recoverable debt is only confirmation of balance, and this can only be confirmed. Yeah, I want to. Okay, sorry, okay. So to confirm the recoverability of the valuation, the auditor will need to perform further procedure to confirm the valuation. Okay, so this is all on the trade receivables. Okay, now I just want you to add on. Okay, so on the further procedures. Okay, so at the bottom here. Okay, I want you to adjust some things. Yeah. Okay, so now let's go and write what will be your further procedures. Okay, now maybe I want you to put it this way. Okay, hold on. Yeah. This is on the recoverability. Okay, so you want to say receivables. Okay, receivables deteriorated. Okay, so deteriorated from 49 days. Okay, to 53 days. Okay, so days. Okay, so now you want to say the audit team merely. Okay, so what they have done, agreed the outstanding. Okay, so agreed the outstanding invoices to the receivables, okay, to the receivables ledger and carried out a sample of confirmation. Okay, sample of confirmation. This only confirms completeness, existence of balances, and you want to say this is insufficient work. Okay, so the above work on its own will not prove. Okay, so will not prove the recoverability of the long outstanding debt. Okay, now outstanding. Okay, so I want you to remember these are the procedures that you will do when it comes to trade receivables. Okay, so the way that you want to remember is SLAP. Okay, SLAP. Yeah. Okay, so what is S? S is you want to say that you want to look at the statements. Okay, so you want to inspect the cash and bank statement. Okay, cash and cash book. Okay, sorry, cash book and bank statement. Okay, bank statement post year end to confirm. Okay, so for you to confirm the extent to which balances owing at 31st March 20x5. Okay, so S is for the statement. Okay, now what will be the L? What will be your L that you would want to confirm if it is a trade receivable recoverable fund? What would you want to confirm? Yeah, no, any enquiry. Okay, so yeah, what do you wanted to say? Cash receipt. Oh, cash receipt. Yes, the one is P, is the post period. Okay, so enquiry. Okay, sorry. This one is you want to inquire, okay, from the credit controller. Okay, so from the credit controller to understand if the controller to understand whether any other receivables are in liquidation. Okay, so anyone is in liquidation or not. So that's the LER. You want to inquire to understand if anyone is in liquidation. Then you want to inspect the receivable aging. Okay, so receivable aging analysis. Okay, to identify which are long overdue. Okay, and the last one is like I told, like you mentioned just now, is post. Here. Okay, so yeah, this one is actually the statement. Okay, so I is you want to find out is that anyone is in liquidation, you want to inquire. Okay, A is you want to look at the aging analysis. Okay, and then P is for the post period. Yeah, okay, so post period, or in this case probably we can't refer to post because remember we don't really have any they already mentioned there is no post, right? Okay, so in that case what we want to do is we go and inquire. Okay, so inquire from the credit controller, okay, to understand the type of procedures used to ensure balances do not get past their due date. Okay, so due date or their credit period. Yeah, this one. Okay, so to understand what is the procedures. Okay, so you can also look into the post. Okay, so you can also look into the post year and cash received. Okay, but not in this case because they already mentioned no cash received. Yeah. Okay. Okay, so are you okay with this? Yeah. Okay, let's just quickly look at the question. Yeah. Okay, so no changes, finance control review all, and then you say is that fewer default. Okay, so all this doesn't make sense. Yeah. Okay, then the finance control is confident that payment will be made. So what is the evidence? Okay, so now let's move on to the next one. Okay, so let's look at the another one. Okay, so this is insert. Okay, so let's talk about the allowance part. Okay, so that was for recoverability. Yeah. Okay, so let's focus on the allowance part. Okay, so allowance that they provided doesn't make sense also. Okay, so of course the above one is summarized. So let's just read it and show. Okay, so the allowance. Okay, so allowance for irrecoverable debt. Okay, reduced from 5% to 3%. Okay, so you want to say this is this does not make sense. Okay, so this does not make sense. The receivable allowance, yeah, receivable age has increased. Okay, so age has increased from 49 days to 53 days. Yeah, okay, so 53 days. The allowance rightfully be increased. Okay, so let's then review. Okay, review receivable aging. Okay, so you review the receivable aging to identify long overdue. Okay, debtors and those who no longer do business with Arjun. Okay, so you want to say this should be written off. Okay, so that's on the allowance part. Okay, so done with the trade receivable. Yeah, now let's move on to the inventory. Okay, so let's move on to the inventory. Yeah, so the inventory, the company has decided to move to JIT method, and with that, the management justified as a reason for the inventory level and inventory holding needs to be reduced. Okay, so the audit procedure performed is just to attend the inventory count, done some sample inventory count control have been observed. Okay, this procedure will be able to confirm the existence of inventory and completeness, but this is insufficient work done for the inventory amount valuation wise. Okay, so the fact that the inventory has reduced significantly, the above procedure is not enough. There is a procedure for accuracy need to be performed. For example, the auditor should perform reconciliation between the inventory count data to the detailed analysis of the year-end inventory report. Okay, so all these are not done. Let me just summarize it how you want to present your answer. Okay, so just insert. Okay, so these are all points that I want to have, but we want to summarize it in more understandable manner. Yeah, okay. So audit team, okay, merely this is on completeness, accuracy of the inventory. Okay, so the audit team members merely attended the count. Okay, so merely attended the count, performed sample count. Okay, and observed the controls. Okay, so controls at count. Okay, and you want to say this is insufficient work. Okay, so doing only the work on its own, okay, will not confirm. Okay, so will not confirm the completeness, accuracy, okay, accuracy, and also the cutoff. Okay, so now what will be the procedures, or what are the procedures left to do? Because doing this, the completeness, accuracy, and cutoff, what are the procedures you need to do? Okay, so you may want to go and obtain, okay, empty, okay, empty the inventory count procedures. Yeah, you want to obtain the inventory inventory sheets, okay, which was filled, okay, so filled on the day of inventory count, okay, so and ensure that all the inventory, okay, quantities have been completely and accurately recorded in the final inventory sheets. Okay. Now, next one is you want to go and inspect a sample. Okay, inspect a sample of a cost for large inventory. Okay, so large inventory in the final inventory sheet and agree this. Okay, so agree this to the latest supplier invoice. Okay, so that is on cost. Okay, next is you go and inspect. Remember, we want to look at completeness, right? Completeness means from source document to financial statement. Okay, so you want to agree this to the supplier invoice. Okay, inspect the final inventory sheet to confirm. Okay, so to confirm that. Okay, so you want to confirm that every item have been stated at the lower of cost and net realizable value. Okay, so some procedures to be done. Okay, so to confirm every item have been stated at the lower of cost and net realizable value, that is for valuation purpose. Okay, now let's move on to the next point. Okay, so now the increase in value written off of obsolete inventory is not consistent with the information provided. Yeah, as the JIT is being applied, the inventory and the inventory holding are reduced consistently. However, it is also reduced. It is also reduced the obsolete to which in this case increased. So that part is not consistent. Okay, so there's a possibility of management trying to manipulate the financial statement with regards to the profit. Okay, now ideally the inventory days and the inventory holding days are reduced. Okay, so obsolete, why want to increase? Okay, so insert again. Okay, so you want to comment on that part, yeah? Okay, so you might want to consider about the fact why, yeah, there is a possibilities here. Why is this not consistent? Supposed to be, I now have lesser inventory, I have lesser holding days, so which means my obsolete stock also should be lesser, isn't it? Okay, so we want to look at it. Yeah, management has increased. Okay, so they have increased the written down. Okay, so written down for obsolete. Okay, so obsolete inventory from 9% to 10% this year. Okay, and you want to say this does not make sense. Why? Okay, so inventory is held in JIT and holding days. Okay, so the holding days is only 15 days. Okay, unlikely that 15 days old inventory, okay, can be obsolete. Okay, and discuss with management. Okay, so should have discussed with management to understand what is the nature of the inventory that makes them obsolete. Okay, in 15 days. Okay, so we want to discuss and ask this. Yeah. Okay, so next is you want to inspect the inventory list. Okay, inventory list to see if any of them fit the criteria. Okay, criteria of being obsolete. Okay, obsolete, and request this item to be written off instead of using percentage. Okay, it will be obsolete criteria. So So now that is the more easy way of understanding. Yeah. Okay. So in view, no further work done. Okay. So it means the assertions are not confirmed. Stating it that it is immaterial due to reason there is no further work done is inappropriate. All this. Yeah. Okay. Auditor will not be able to confirm if it's appropriately reflected if. And this could lead to misstatement in allowance, okay, which could be material. Yeah, hence, auditor will need to do further discussion with management, production to staff to understand reasonableness in increase, and subsequently identify items which will be subject to written off and obtain an explanation for the procedure done. Okay, so that has been summarized at the top. Okay. 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 So now let's take a look at here. Yeah. Okay. So where's this the notes? Okay, so we have done with all these questions. Okay, done with this Myron, we have done with Arjan. Okay, I want to give you a break for a while. Okay, so you can take a break up to 9:15 like that. Okay, you come back. We're going to start doing on methods that will be discussed with management, methods that to communicate with those charged with governance, and how do we discuss on the efficiency that we report to management and those charged with governance. Okay, so this part 4 of the syllabus. Okay, so hopefully we can finish. Yeah, okay, this whole part 4 today, so that we can continue on part 5 and 6, and also last one is on quality management. Okay, on Saturday. Okay, so let's look at all this, but take a break for a while. Okay, so we have not done much, so I don't think you should be very tired. Okay, so 9:15. You come back, we'll start with part 4. Okay, so this is meetings with management, communication with those charged with governance, ISA 260, 265, and also what we will discuss in terms of misstatements, so all those areas. Okay, so take your 15 minutes break and come back. let's continue, yeah? Okay, you ready? Can you look at your notes here? So hold on. Okay. So we're going to have a look at two areas. Okay. Now very quickly, I'll try to make it as simple as possible for you to answer this type of questions. Okay. So there are two types of question when it comes to. Okay. So hold on. Yeah. Let me just So I'll just put it in one sentence. I mean one box first. Okay. I want to explain to you. Okay. So this is number one. Meeting with management. Okay. So meeting with management questions. Okay. So what about meeting with management is, when is this going to happen? When will you go and meet with management? When you have already done the work. Okay. So you already done the final audit and you basically want to. Okay. So this is meeting with management. Okay. So the auditor is in the stage where in the stage to convince the management, okay, to make the relevant adjustments. Okay. So most of the time, these adjustments that you want to ask them to do is misstatements. Okay. So now we got what type of misstatements? Yeah. How many type of misstatements? It could be the factual misstatement. It could be the judgmental misstatement, and it could also be the projected misstatement. Okay. So misstatement. Okay. So all these misstatements are going to be evaluated. Okay. Evaluated individually and also in aggregate. If aggregate. Okay. So whether this is going to have any implication to audit report. Okay. So the way that we want to answer. Okay. So the way that you want to present your answers would be. Okay. So because there will be a misstatement, isn't it? Okay. That's why you want to communicate the matter to the management. So the way that you want to present the answer. Okay. So you want to have AAM. Okay. So remember, if it's a method to discuss with management or meeting with management question, AAMM is the way that you want to present your answer. Okay. So what is an A? A is actually you want to discuss about the accounting issues. Okay. So accounting standard wise, yeah, what is required. Okay. So what is the accounting issue that they have? Okay. So all those things. The second one is on what is your accounting entry. Okay. So what is the double entry required for the adjustment. Okay. And then you want to talk about the materiality of the issue. Okay. And finally, you want to tell that, okay, so you want to request the management to do something. Okay. So ask the management to make the adjustment. Okay. And then you can talk about how it's going to be an implication to audit report. And if they don't want, you probably want to obtain, like what will be your next step? Okay. So probably want to obtain written representation from them. Okay. So those are the ways for you to present your answer. Okay, so this is on meeting with management question. Okay, now we have to understand that this is an important stage. Okay, because stage in the audit. Okay, because if it is not, you are unable to convince, then you move on to communicate the matter to those charged with governance already. Okay, which is our next topic. Okay, now there's nothing much in terms of notes that I want to discuss. Okay, on this topic, but it's more that I want to do question. Okay, so meeting with management question. Just remember, this is the way that you want to present it. Okay, in terms of note wise. Not much, yeah, because again, we're going to talk about, the factual, judgmental, projected misstatement, which I'm sure you already aware of how to present it. Okay, so now look at the question that we want to do. It is in BPP. Okay, so hold on, yeah. It is called Barnaby. Okay, so you look out for Barnaby. Sunningdale is a new question which I want you to do as an homework. Okay, so Sunningdale, later I'll upload the question for you, or you can do it in practice platform. It's 2023 question. Okay, so later when we do methods to communicate with those chartered governors, also we'll do tailors. Violet is also again as an homework. Okay, now let's go and do this very quickly. Now look at Barnaby. Barnaby is actually after the Arjan Co question. Okay, so where was the Arjan Co question just now? Look out for Barnaby. Barnaby. I call Arjan. Okay, so after the Arjan Co is actually Barnaby. Okay, so you scroll down, yeah, this part here. Exhibit 2. Okay, so now let's just quickly go and do this question. This normally there will be misstatement. Okay, so or there might be some kind of limitation of scope or something, yeah, that you want to communicate it with management. Okay, so you are preparing. Okay, so you're preparing for a discussion with management of Barnaby Co about misstatement. Hold on, yeah, is this being recorded right? Okay. So Barnaby about misstatements identified in the financial statement during the audit for the year ended 31st March 20X5. Okay. So you are preparing, yeah, for the discussion with management about the misstatement. Okay. So the audit working paper contained the following schedule of uncorrected misstatement prepared by the audit team. Barnaby Co financial statement prior to any adjustment for the item shows a profit. Okay. So they are showing this figure. Now look at the profit before tax is already reduced. Okay, reduced, yeah. So now probably they don't want to adjust it, obviously because of the reduction. Okay. So now total asset is also reduced. Okay, so this is a deteriorating performance in that company. Okay, let's go and look at the summary of the schedule of uncorrected misstatement. Yeah, okay. So what do they have? They are saying that there is a need for adjustment. Government grant need to be debited by 5 and credited by 5 on the financial position. Okay, so they have to debit, which means expense it off, and credit means that to be recognized as some kind of liability. Okay, so machine is also debited by 1 and also credit financial position by 1. Okay, so that is the statement situation at this point of time. Okay, so increasing expenses. Yeah, okay. So government grant. Barnaby Co received a government grant on 31st December 20X4 to invest in new machinery. Okay, a condition of the grant requires. Okay, so they received the grant on 31st December. Okay, so when is the year end? The year end, the year end is here, 31st March 2005. So which means they have received this one a few months before the year end. Yeah, condition of the grant requires the fund to be invested within 12 months of the grant date, or it becomes repayable. Okay, so which means they have to buy this new machine within 12 months. Yeah, so the grant have been recognized in full in statement of profit and loss for the year. The machine has not yet been purchased. Is Is it right to do that? They have recognized in full, which means recognized the profit and loss, but the machine has yet to be purchased. We think that the money will be invested by the year end. Okay, let's just quickly revise on grant. Okay, now we have how many type of grant? Yeah, government grant. We have how many type of grant? Just a quick revision. Grant. We have how many type of grant? Two type. Okay, so one is capital grant, another one is revenue grant. Okay, so capital grant, revenue grant. Yeah, capital grant got two methods. Yeah, one is the deferred income method, another one is net off method. Okay, government grant only have deferred income method. Okay, but you can present it as a net off of expenses, or you can separately present it as an income. Okay, so the fact that this is going to be given, or it is given for the purchase of machinery, which means it's obviously it is a government, capital grant. Okay, so now what they have done is they have recognized the income in full. Okay, now is it right to do or not? What do you think? So they have received this 5 million and they have recognized it as an income. Okay, so is this right thing to do? No, it's supposed to be recognized as income only when you can recognize the income. Yeah, when they can recognize this income? When the machine is being purchased. Yeah, correct. Okay, so when it is already been purchased, then only you can recognize it as income. So right now they have done something that is not in compliance with IAS 20 of government grant. So due to that, we have to make the adjustment. So because this is a question which is related to a discussion with management, we have to convince them. We have to tell them, hey, this is not right thing to do. Okay, and we may want to put in a point that maybe they want to do this because of the fact that if they don't do this, if they don't recognize it as income, the losses or the reduction in the profit will be more obvious. Okay, so as it is, it's already reduced by certain percentage. Yeah, okay. Now look at the second one. Okay, so on 31st March, which is the year end, Barnaby Co. sold a machine with no longer in use. Okay, so which is no longer in use under the term of sales agreement. Under the terms of sales agreement, the total sale price of the machine of 10 million should be paid on 31st March 20x6. Okay, they sold a machine, yeah, which is no longer in use. Okay, under the term of the sales agreement, the total price of the machine is 10 million and would be paid on 31st March 20x6. Okay, so very important, yeah, is the dates. Okay, so when happened? 31st March. When going to be paid? 31st March 20x6. Okay, so the company has recognized full sales value of 10 million when calculating profit on disposal of the asset. Okay, so the audit team has calculated that the net present value of the receivable at the reporting date is supposed to be 9. Okay, so the profit on disposal and the receivable are being overstated by 1 million and based on the company cost of capital of 10%. Okay, so which have been calculated by the client. Okay, so now sufficient and appropriate evidence have been obtained in relation to this calculation and concluded that 10% is appropriate cost of capital. Okay, now if I am going to only pay on the rates, okay, at this point of time I should recognize it at future value or present value. Should I recognize the income at future value or present value? Yeah, present value. And what they have done, they recognize it the future value, which is the 10 million. Ideally, should only recognize it at 9 million. Okay, so we have to go and convince the management and say that you have to do this adjustment, which is going to be adjusting the debit and credit of the amount. Yeah, okay, now let's quickly do this question because I'm hoping that we can do one on communication with those charged with governance. Yeah, okay, so you have a Word document. We'll answer this Barnaby Co. Okay, so Barnaby Co. Barnaby Co. Okay, so quickly. Now we have to discuss on obviously on two matters. Okay, so one is on the government grant. Okay, another one is on the what their machine that they have disposed of. Okay, so both we're going to present the AAM. Okay, so this is also AAM. Okay, so now let's go ahead present our answer for Barnaby Co. Yeah, just quickly look how my workings. Okay, so now what would you do? Yeah, what would you tell to them? You have to discuss about what is the accounting standard of it. Okay, and then you also have to talk about what is the correct adjustment that is required. Okay, and then you have to discuss about the materiality of the item. Okay, so is this material or not? Is this material or not? Have you calculated? Anybody calculated whether the amount is material or not? The government grant you will calculate based on what item? Material. Okay, so the government grant where would you calculate the material here? Government grant. PBT, yes, correct. Okay, so be careful on where do you calculate. Yeah, okay. So the machine is now currently it's of course overstated on total asset. So you calculate the machine over the total asset. Okay. So now the grant is how many marks? Yeah, let's just see because we have to target allocation. Okay. So requirement is using the information, recommend and explain matters which should be discussed with matters that should be discussed with management in relation to each of the uncorrected misstatements, including an assessment of individual impact of the audit opinion if management does not make any changes. Okay. Now look at the mark allocation. Grant is 5 marks and then machine sales is 3 marks. Okay. So we have to do the appropriate explanation to earn that 5 and 3 marks. Okay. Now there is also professional marks involved. Nice. Okay. Now let's talk about the grant first. Okay. So the grant first is remember accounting standard wise. Yeah. Okay. So grant received for the machinery. Okay. For the machinery yet to be purchased. Okay, so yet to be purchased has been credited to income, yeah, to other income. Okay, so comment about it and say that this is incorrect accounting treatment. Okay, so this is an incorrect accounting treatment. Grant monies. Okay, so grant money is relating to machine. Okay, machines not yet purchased. Okay, so talk about what does IAS 26. Yeah, not yet purchased should initially recognized. Okay, so should be initially recognized as deferred income. Okay, regardless of the management promises, okay, that the machine will be purchased by September X5. Okay, so that is the accounting issue there. Okay, now let's talk about what will be your double entry. Okay, so because of the incorrect accounting entries, okay, the deferred income is understated and other income is being overstated. Okay, so therefore now need to debit. Okay, debit from the other income. Okay, how much do we need to debit from the other income? 5 million. And credit the deferred income by 5 million. Okay, so let's talk about the materiality of the issue. Yeah, okay, so currently the grant is in PBT, so we will calculate based on PBT. Okay, now the grant of 5 million is 11.6% of PBT. Okay, and is material. Okay, but however, it should be presented in total asset also, right? So the grant is also 4.8% of total asset and also material. Okay, so we want to talk about what management should do. Okay, management should be encouraged. Okay, should be encouraged to make the adjustment because of what reason? Because of following reasons. Yeah, number one, you want to say the initial. Okay, initial entries. Okay, so the initial entries are a violation. Okay, a violation of IAS 20. Second one is the auditor opinion. Okay, would be qualified. Okay, would be qualified if adjustment are not made. Okay, so now we have to also include an individual assessment of what does the individual impact to the audit report, right? Okay, so individually, what will be the impact? Material already, financial statement contain material misstatement. So what type of audit report will be given? Material, but is this pervasive or not? Would you consider this as pervasive? Anybody? Not pervasive. Okay, so we're going to give a qualified except for. Okay, so you want to say this matter is material, but it is not pervasive. Okay, pervasive. Okay, so not pervasive because of what reason? Because this relates to. Okay, so this relates to only one issue, and therefore, okay, so you want to say therefore the opinion will be qualified except for. Okay, seeing that. Okay, so seeing that the financial statement are materially misstated due to the non-compliance with IAS 20. Yeah? So then you want to say opinion paragraph. Okay, so opinion paragraph will be titled qualified opinion. Qualified opinion. Okay, and the reason for the qualification. Okay, so reason for qualification, which is the grant monies are prematurely recognized as income. Qualification, okay, so should be, okay, will be explained in the basis of qualified opinion. Okay, paragraph, and will be positioned immediately following the opinion paragraph. Okay, so done with this. So any question that you have? Are you okay? Not? It's a short question. Later you try the Sunningdale question, which is a longer one. Yeah. Okay. So yeah, the next class we will quickly discuss. I'll give you the answer and then we can discuss that Sunningdale question with you. Okay. Now we still have another one which is on the machine sales and is related to the fact that they recognize income in accordance to IFRS 15. You have to recognize it at present value because if you're going to pay 1 year later, if you're going to receive the money later, then it means that it is at future value. Okay. So let's go and see on the machine sale. Okay, machine sale. Okay. So now let's go and see profit on disposal. Profit on disposal of machine. Okay. Disposal of machine is incorrectly determined. Okay, so this has been incorrectly determined, and since the proceeds would only be received in 1 year. Okay, so will be received in 1 year. Okay, so we want to say the proceed should be should have been discounted. Okay, should have been discounted to its present value based on the cost of capital of 10%. Okay, so let's talk about the accounting adjustment. Yeah. Okay, so what should be the accounting adjustment? In fact, the question they themselves already put for us. What will be the accounting adjustments, isn't it? Yeah. So what is the accounting adjustment that is required? We have to talk about because the proceeds because the proceeds of the disposal, okay, were not discounted. Okay, was not discounted, and the profit on disposal and its related receivables, okay, is overstated by 1 million. Okay, so this need to be corrected. Okay, so this need to be corrected, and how are we going to correct this? We debit profit on disposal and 1 million, and we will have to credit the receivables. Okay, so receivables by 1 million. Okay, so that is your accounting adjustment. Okay, so then you want to talk about the materiality. Okay, so the overstatement of the profit on the disposal is 2.3%. Okay, so 2.3% currently this figure is in the other income. Yeah, 2.3% of PBT, and it is 0.95% of total asset, okay, and not material to SOPL and SOFP. Okay, so not material to both, yeah, okay, but we have to tell them you still need to do because in aggregate it will become material, okay, so all those things, yeah, okay. So management should be encouraged, okay, should be encouraged to make the adjustment. Okay, so ask them to make the adjustment because of the fact that this is a factual misstatement, okay, the fact that this is an factual misstatement and the cumulative misstatement. Okay, cumulative misstatement should not be allowed to increase, okay, and then we have to discuss what's the implication to the audit report, okay. So I want to say this misstatement, okay, so this misstatement is not material and therefore there is, okay, so there is no, okay, so no individual, okay, so there is no actual individual impact to the financial statement, but does it mean if that is all? Yeah, does it mean we just stop here? No, yeah, we'll still need to talk about it. We have already talked about the cumulative. Okay, so now this misstatement is not material and therefore there is no individual impact to the financial statement. Okay, hence the audit report will not be affected even if no adjustment done. Okay, with regards to this method, this method. Okay, because your question is asking what will be the individual impact. Hold on, yeah. And that's the reason that they are only giving us 3 marks for this and they're giving 5 marks for that, okay? Because they have to explain even more in depth about the audit opinion wise. Okay, now that's all for this question. Okay, so now if you're asking how you will get the marks, isn't it? Okay, so now generally there is 3 marks there, isn't it? Okay, hold on, yeah. Let's just insert and understand how you will get marks. Okay, so this part here, okay, so you're talking about the accounting standard and so on, yeah. Okay, so not for why. Okay, so the fact that you're talking about the accounting standard and so on, you'll get 1 mark. Accounting double entry 1 mark. Your materiality should be 1 mark. Your management encouraged this part if it's a correct answer, yeah, all 1 mark. Okay, so that is 1, 2, 3, 4, 5 marks. Okay, now the other part here, the machine sale. Okay, so the fact that you are able to explain, I think this could be 1 to 2 marks maybe. Okay, so instead this one will be only 1 mark, 1 mark, 1 mark, 1 mark, and the implications 1. Okay, so normally this materiality part all, it is also going to contribute to your professional skill marks, yeah. Okay, so in total this is what you will be able to do score. Okay, so these answers are already incorporated with the professional skill marks. Okay, so done with communication with management. Okay, so the question that I want you to do will be hold on, yeah, it's called funding deal. Okay, hold on, I actually extracted this from the so day 5. Okay, so I'll put this day 5 questions. Okay, so this is day 5 questions and the first question is on funding deal. Yeah. Funding deal is a new question. Why cannot? September 2023 question. Okay, so I put it in here. So you try this question. Okay, so later I'll put in another question called Violet. It is also from 2023 question. Okay, so these are all new question. You are able to see me, isn't it? Yeah, just not show me not connected. Are you all there? Now I want to continue my notes with regards to the communication with management. Okay, so once you've done, are you all there? Not, yeah, all very silent. Is it because it's already 10 o'clock? You all are very tired. Oh, yeah, yeah. My phone also tell me already. Yeah, it's a sleeping time. Okay, but yeah, we have to do it. Okay, now let's look at communication with methods to communicate with just went. Okay, so next one is on communicate. Okay, so methods to communicate with those charged with interesting. Why not detail? Actually covering on 2 areas. Okay, you also have ISA 225. Okay, so there are possibilities are there. They are going to ask you to present the answers in terms of like in the in the format of management letter. Okay, so we have to be prepared and we have to know how to present a management letter also. Yeah, okay, so in case if they ask, okay, you remember what is a management letter? What do we have in our management letter? Communication. Okay, so communication with those charged with governance. Okay, so questions. Okay, communication with those charged with governance. You want to remember this is ISA 260, ISA 265. Okay, so these are 2 things here. Now remember what we will communicate with those charged with governance. Okay, mostly we're going to request them few things. Yeah, we want to inform them. Okay, so inform them about the significant matters. Okay, so significant matters means like probably it is your significant findings. Okay, so something that is related, okay, accounting issues. Okay, so all these are things that you might want to inform. Okay, so what else that you will communicate? What are the form of communication? Next is you probably want to request. Okay, so let's say you want to request them to do some kind of investigation. Okay, or you may want to ask them to remove any limitation of scope. Okay, so all these are possible. Okay, now next one is you probably also want to warn them. Okay, warn them in terms of what will be the implication to audit report if they don't make such adjustment or if you don't remove the limitation of scope. Okay, so these are the key actions that you will do, yeah, when you communicate the matter with those charged with governance. Okay, so you want to understand what are the key things that you will need to communicate. Okay, so actually not a lot, yeah. Okay, so not a lot, but any of this can be examined. Okay, so now in your this type of question, they will normally make it clear. Okay, the question. Okay, so the question will be clear. Okay, in terms of the methods. Okay, in the scenario will either be it will be following. Okay, so following circumstances. Okay, so what are the circumstances that they might want to they might have is, hold on, yeah. Okay, so what are the circumstances that they might have is, for example, they might have IFRS issues. Okay, so there might be, for example, it is an audit work issues. Okay, so there might be some internal control issues. Okay, so let's just list down what could be the issues that we have here. Ethical issues. There will be, yeah, like this can have many items in that. Okay, so it can be some modification in the audit report issue. Okay, so you may be warning them. There might be some fraud. Okay, so fraud. It can be some no-cla issue. Okay, so there might be some issues with going concern. Okay, so there might be an issue on money laundering. Okay, money laundering issues. It could be issues with component auditor. Okay, so it could be any of all this that you want to highlight. Okay, so we want to categorize this, yeah. Okay, so we might want to categorize this. If it's an IFRS issue, we call this as significant findings. Okay, so if there is an audit work issue, which means they are giving you a problem, then we call this as significant difficulties. Okay, so if you have an internal control issue, we want to call this as significant deficiency. Okay, so if you have ethical issue, then we want to talk about this is going to have an ethical, right? Okay, so or we want to mention it as it's an independence issue with auditor independence. Okay, so if it's a modification in audit report, it is also some a fraud, no-cla issues with going concern. So all these are, you can just mention it as your significant findings. Okay, hold on, yeah. If it's a fraud, it's a no-cla. All these are significant findings. Okay, so issues with going concern, all these are significant findings. Issues with component auditor, significant findings. Component auditor may be findings. It could be some significant, depends on. Okay, significant difficulties. Okay, so if it's a modification in audit report, that is something that you want to highlight, yeah. Okay, so probably this is going to be a finding also. Okay, so we have to understand what will be the issue and we have to explain it in depth about that significant item, yeah. Now remember, whatever that we communicate with, okay, so the communication with those charged with governance is always on significant, always on significant. Okay, so significant items only. If it is insignificant, okay, for example, there is deficiency but it is insignificant, then I don't communicate it with those charged with governance. It's only discussed with management only. Okay, so we have to remember all this because the way that we want to present the answer will be, okay, so the way that you want to present the answer, okay, this is not going to be a lot. Okay, so this is only going to be 3 things. Okay, I did it the whole thing. Okay, so you want to present your answer as, okay, so you want to have your observation. Okay, so what's the issue about? You have to identify what matter is that. Okay, so whether it's a significant difficulty, significant deficiency, significant findings, or what. Okay, so you mention it there, and you want to talk about what's the reason you want to communicate it to those charged with governance. Okay, what does reason means? I want to tell them about the significant findings so that they can act on it, they can investigate about it, they can improve on the internal control efficiency. So that way, okay, because remember, we have to tell them reason why I view it as a significant. Okay, by viewing it as significant, I want to tell them how it is serious and how is it need to be highlighted. So I have to tell in reason. Okay, so this is going to be observation. Okay, so this is going to be on what is the matter about. Okay, so what significant is that? Yeah. Is that, and then this one you have to talk about what's the reason for it. Okay, so this is how you want to present your answer. Okay, now I want you to look at one question. The question, Taylor Co. is a little bit old question. Yeah. Okay, so let me go and look for this question called Violet. Okay, can you go and look for Violet question? This is actually in the very new question. Yeah, this is actually wait. Yeah, this is it's a good question. Okay, so this is June 2023. Okay, so June 2023. I think yeah. Because I wanted to do Taylor actually, that's why I've not taken out the Violet question. Okay, so wait, yeah, let me see. Violet. Do I have it? So this is in the examiner. Yeah, let me see if I have this. That's all old question. Okay, so hold on, yeah. Let me just access to the practice platform. You also can go to the practice platform. Okay, so hold on, yeah. This is a more question. Have you yeah, talking about the mock, yeah, have you done your pre-mock questions or not? Have you all tried looking at the mock question? Not yet. Not yet. Must do, yeah, must do, because it's going to give you it's going to give you some idea about what could be coming out for the exam. Okay, so at least some practice on the mock exam is essential. So please do. You know, at least when you finish the spring class already, please do it. Yeah. Okay. So yeah, I try to look at this violet question. It's too new. Okay, so that's why it is not in the BPP also. Yeah, very slow. Because I've done Taylor so many times. Yeah. So I want to look at this violet question and do it with you because Taylor is very easy actually. Okay. So hold on. Yeah. Let's see how fast this can be circled. If anyone have it, maybe we can do it in the practice platform itself this time around. Anyone can access to it. Maybe I open too many things. Sometimes this thing is very slow. Yeah, one last time I'll try. If not, we're going to do the Taylor question first, okay? Then while you can try and then I can discuss with you quickly. Okay, so it's just loading for too long. Okay, so probably I don't want to try this question. Okay, so now look at, I'll give you later. Okay, so I thought I wanted to do Taylor. Okay, so we have Taylor in the BBP. So let's then look at Taylor. Okay, because Taylor is okay. See, still loading. Yeah, doesn't work. Okay, so never mind. Maybe. Not sure. Okay, now look at the Taylor question. Okay, so this is actually the original question. Yeah, the original question is actually called Kilminster. Okay, but I'm not going to do the first part of the question. You scroll down to look at the part B of the question. Okay, so for not part A, yeah, look at part B of the question. Is it okay? Have you found Taylor Co? Is it? Can we go and try to look at Taylor Co question? This one, part B. We all found it. Hello. We can finish it at 11, isn't it? Yeah. It's okay. Now we will look at Taylor Co. Are you all there? So this Taylor Co has 12 marks to it. Okay. And then you have to take into account that there is possibly, there is a professional skill mark that you have to take note also. Okay. So now let's then read first. Okay. Now your firm Eddie and Co have asked you to perform an engagement quality review of the working paper of Taylor Co, which is an listed entity. Yeah. Have been an audit client of your firm for the last 10 years. Okay. Now the moment you see this, okay, hold on, yeah. Let's see the requirement first. You require to, from the information above, recommend the matters which should be included in Eddie Co's report to those charged with governance and explain the reason for their inclusion. Okay, so that's the R, yeah. Okay, so you have to recommend and basically identify what's the matter and then why is it need to be explained to the why is it need to be part of the inclusion. Okay, so now let's see, yeah. Your firm Eddie and Co have asked you to perform an engagement quality review of the working paper of Taylor Co, which is a listed entity, okay, and has been an audit client of your firm for the last 10 years. Okay, the moment you see this last 10 years, what you should be thinking about? What would you be thinking about? Yeah, issue with in terms of independence, familiarity, threat, yeah, all these things, yeah, okay, because it's a long-standing client, okay. But can we have a client for 10 years or not? Is it allowed for us to have a client for 10 years? Yeah. Yes, correct. We can, yeah, but we will need to change the partners, okay. So partner and EQR, and then if you have a key audit partner, all these people need to be changed, okay. But it is still okay, yeah. So provided they are changing, so that's heads up. Okay, so the audit fieldwork is almost complete, and as part of your review, you have been asked to advise the audit team on the draft of their report to those charged with governance. Okay, so Taylor Co is a discount food retailer which operates 85 stores nationally. Okay, so they are operating 85 stores nationally, which means they are huge. Okay, so the financial statement has shown us all these figures. Yeah, 247. Okay, there is an increase, there is a slight increase. Also, asset is all asset has increased a lot. Yeah, okay. So the others are increased a little bit only. Okay, so later if there is a need, ideally you should be counting already. Okay, so that in our answers we may use it. Okay, so how much is the difference? 5 divided by 2, 4. Okay, so that is there is an increase of 2%. Okay, so 2% there, and then profit before tax is 14.6 minus 14.1. Okay, so that's an increase of 3%. 3.54%, and then your total asset is the one increased a lot, yeah, 535 minus 321. Okay, so divide by 321. Okay, so that's a huge amount of increase, okay, which is 66.6. We can expect that they have done something, okay, so that's why it is a huge increase. Okay, so now after a period of rapid expansion, in 20x5 have been a year which Taylor has strengthened its existing position within the market and has not acquired any additional stores or businesses. Okay, So which means they are not investing in anything this time around. In the company draft statement of financial position includes a property portfolio of 315 million, all which are legally owned by the entity. In the current year, the company has chosen to adopt a policy of revaluing its property portfolio for the first time, and this reflected in the draft figures in 20x5. Okay, so this is the amount that is being reflected here. Okay, so we will need to calculate materiality later on because we want to justify how significant is this issue. Okay, so the audit work on property, plant and equipment included testing a sample of revaluation. ADCO requested at the planning stage that the independent external valuation report should be made available to the audit team at the start of the final audit. Okay, a number of these documents are not available when it is requested. Okay, so when you talk about not available, what were you thinking about? Yeah, not available means it's going to be significant. Yeah, limitation of scope. So what do you want to say? It is a significant difficulties. Okay, so the audit working paper on property, plant and equipment include testing on a sample of revaluation. Okay, and ADCO requested that what is this? At the planning stage that indeed, ready. Yeah, okay. So the audit paper also identified that the review of non-current asset register, there are 4 property with a total carrying amount of 11.1 million, which has not yet been revalued and still being recorded at a depreciated historical cost. Okay, so what do you think about this? Is it okay? Can we present it at selective manner? Can we do that? Yeah, is it allowed for us to do that? No. Okay, so what does your IIS 16 says? Must review all, in not all. Okay, so in the same class, in same classes. Okay, so if you have motor vehicle, you have property, you have property, plant and equipment, right? Under property, plant and equipment, you have motor vehicle, you have land and building, you have plant and machinery. So let's say I choose to revalue the plant and machinery. I have to revalue all the plant and machinery. Okay, so which means here it is property portfolio, right? The whole property portfolio need to be revalued. Okay, so it doesn't mean that all the PPE need to be revalued, yeah, but all the class of asset need to be revalued. Okay, so that is one. So what will it be? It's a significant finding. Okay, so the audit supervisor's review of Taylor Cohort Mini identified that the company has renovated car parks facilities at 17 of its stores, which has resulted in significant increase in customer number and revenue at each of this location. Okay, so the total cost of the renovation was 13.2 million and has been included in operating expenses for the current year. Okay, what they have done is correct or not? Renovation. Can we press this renovation and then include it as operating expenses? Can we do that?
No.
Yeah. What we should do? Yeah. What is the reason we cannot expense it out? Need to be capitalized. Why? Because of the fact that it has enhanced the capacity. Okay, so look at the result here. There is a significant increase in customer number. There is a revenue increase in each of these locations. So there is an enhancement in the capacity due to the renovation. So it needs to be capitalized. Okay, now they have not done that. They have expensed it out. Okay, so the audit file include a working paper recording discussion with management, which confirms that capital expenditure authorization form has not been completed for this expenditure. So what is this? What is this? Yeah, there is no authorization form means. Yeah, that is going to be your significant deficiency already. Okay, so now let's go and look at the next thing. Yeah, you are aware that your firm has intended to replace the current engagement partner. Okay, and who is the Brony? Okay, with Phillips. Okay, who is Eddie Co's other specialist in food retail. Unfortunately, Mr. Campbell was taken ill earlier in the year and will not be able will not now be available until next year audit engagement. As a result, 20x5 is the 8th consecutive year in which Brony has acted as engagement partner. Okay, now is this okay or not? He's becoming a partner on 8th year. We always been talking about the fact that every 7 years we need to change. Is it okay? Yeah, okay, but we will need, okay, so it is acceptable for you to extend another year, that's the maximum, yeah, another year, provided that the reason is unavoidable circumstances and the matter need to be communicated to those charged with governance. Okay, probably we want to have, okay, let's see, is this in a, so we probably can have some EQR to review the files. Okay, so we can take the relevant safeguarding to ensure that the familiarity threat is reduced. Okay. So how many items do we have? We have one on ethics, okay, one on deficiency here, okay, and we have on accounting issue, number 3. Number 4 is they have done the evaluation wrong, okay, and then we also have on the significant difficulties, okay. So there are 5 points there and we have 12 marks that we need to present, okay. So how do we want to earn that additional 2 marks? Because the way that you're going to earn points is coming back to the answer, okay, so hold on here. Okay, so we have to have strategy. Okay, so observation, no marks. Your methods will be 1 mark, and the reason is going to be 1 mark. Okay, so we may want to put in more reasons so that we can earn more marks. Okay, because there is only 5 issues, but we have 12 marks for it. Okay, so now okay, I'll just write it here. Yeah, why not is a homework. Okay, so now let's go and answer this question. Yeah, this is Taylor's score. Okay, now there is high chance. Okay, let me tell you why we don't have here. Actually, this is one of the common question have been examined. Okay, I think last December sitting also they have asked those charged with governance. Previously also they have examined this like in recent times, yeah, but there is possibilities of getting examined again. Okay, but they don't publish it. This one all the students will tell to us what was examined, but they have not published it. Okay, so that's why I question a little bit less, yeah, okay, on this area, but it's an important topic. Okay, now this is on Taylor. Okay, so we have to have observation, method, and the reason why we're going to present it. Okay, so let's go and talk about the observation first. Okay, so we want to have this is on revaluation first. Revaluation is a significant finding. Okay, so revaluation, we want to say a number of revaluation report. Okay, probably on the report first, yeah, revaluation report were requested. Okay, so were requested